Eric Mother, Mother.com for the weekend of November 28th and November 29th, 2015. Take a look at how markets closed in the US on Friday. Let's call it a pretty much unchanged for the Friday session, which was a pretty much half day. We take a look at gold, which was down about 1.29, and oil was down about 3% on Friday. For the week, S&P 500 was unchanged, up 0.05%. For the week, the Dow was down 0.14%, and for the week, the Nasdaq was up 0.44%. Let's take a look at the charts. We begin by taking a look at the Nasdaq Weekly, and we are still trying to move above this RSI line of resistance. So depending on which way the market wants to go, if it can clear that resistance, we might see some more upside going into the close of the year. Otherwise, if this is confirmed as resistance, we should start looking for that pullback. Also, if you take the last two recent weekly closing highs on the Nasdaq, it seems like it forms a nice straight line like that. So clearly, if the market is to move higher, it needs to move above that line. Otherwise, if it cannot, then definitely we're going to see a short-term pullback in the market. Take a look at the Nasdaq Daily, and we can see similar type analysis. If you take the daily closing highs and draw a straight line, you can see they form a nice trend line here. So if the market wants to move high, it needs to take out that resistance line there. Otherwise, any resistance on that line and we start pulling back, that might be the beginning of a pullback that many have been waiting for. If we take a look at the Dow Weekly, it's pretty much the same type of analysis. We take the recent weekly closing highs. You can see they form a nice line of resistance on the top side on the weekly chart. So either this is going to be resistance area right now, or eventually the market can move above that line of resistance and move higher. And we can also see that the RSI weekly line that we've been watching continues to be resistance. Right now, after this week's shallow drop, it looks like the market is still respecting that line. Anything below that line would indicate lower prices. Otherwise, bulls would like the market to clear that resistance so we can start adding on to the recent move. For now, we are still at resistance, so the market has to take out those two lines, either the price channel line or the RSI resistance line, if the market is to continue adding on to recent gains. If we take a look at the Dow Daily and we study this high, so this is the daily closing high on the Dow, and just take that break there and we draw a line from there, we can see that this is exactly where right now the market is finding a little bit of a resistance. Now this red line was resistance here in July before this drop, and we broke through that red line here somewhere there, and now we are coming back to test that line. So clearly, even on the RSI, we need to be above that line if we are to continue moving higher. Otherwise, if the red line is confirmed as resistance again, we should start expecting a pullback. We also see the trend line on the daily for the Dow, just like the Nasdaq. If you take the highs like that on a daily closing basis, seems to be a trend line here. And short term, we need to see and watch for either a breakout or resistance to determine the next swing trade. S&P 500, we can still see that still the same type of analysis here, just like the Dow and the Nasdaq. Either this is going to be resistance on the weekly RSI, or maybe now the market might have enough momentum or find a way of moving above that line of resistance. So we are still trading on that resistance line. We need to see which way the market wants to go for the market to tell us what the next swing trade might be. If we take a look at the S&P 500, we can see that all the S&P 500 needs to do is break out above the recent November daily closing high. So if the market can clear that resistance on a daily closing basis, or anything above that might actually be a strong show, because we can see here that we have a stabilizing to upward trending 200-day moving average. We have a nice upward trending 50-day moving average. So at this rate, a breakout would suggest that the market would cross over the 50 and the 200-day moving average, which would be a sign of maybe short term the market wants to go higher. But until we can clear that recent November daily closing high, we are still have to contend with the resistance, and that resistance so happens to be just like we discussed on the Dow, somewhere around there. you can see that this, if you take the daily closing high on the S&P 500 in May, that daily closing high took place here, and all the highs since then have taken place on this red line, even here. And recently we broke through the red line, which was the high there, and now we are back testing that level. So on the S&P 500 daily, short term, the RSI is telling us if we can't move above this line here, we should expect a pullback. And if we can see ourselves clearing that level, then short term we can expect the market to move higher. Since we closed exactly on the red line, we have to wait to see which way the market wants to decide to go, and this should give us the next swing trade possibility. A breakout would give us indication of upside on the next swing trade, or resistance would suggest that the next swing trade is to the downside. Take a look at Apple Weekly, and this is very simple. We can take the weekly closing highs, and you see they form a nice straight line there. And so we can see that short term there seems to be some type of resistance on the weekly chart, and if the market is to change this, it needs to break out above that line of resistance. Also on the RSI, if you take the highs going back to February and extend the line connecting the highs, you see that it connects nicely here through here, connecting to that, and the most recent resistance, which seems like a double top. So we can see that as far as the week-to-week action, Apple, in my opinion, has a lot of work to do to clear those two resistance. One coming from the channel on the price, and the second one on the top side on the weekly RSI. Anything below that, or anything below those two levels, the price and the RSI, would indicate lower prices. And also keep in mind that we are trading very close to the 50 level. Should we crack below 50 on a weekly RSI time frame, that would suggest a net big down week. So just keep that in mind. So, and again, let me draw that so you can see that on the RSI on the weekly, there's a simple line connecting the highs, and that is resistance. Until we can clear that line of resistance, one should expect that, generally speaking, the market is indicating as of right now that the stock wants to go down. In this short video, since not much has changed from the last weekend's analysis, just watch the Nasdaq. Should it break out above the recent all-time monthly closing high, and again it's 5128.28, anything above that would be the Nasdaq breaking out, and we are very close to that, so we have to respect the possibility that the market is breaking out. We take a look at the Dow. The Dow also could break out above the recent all-time monthly closing high, and the level to watch there on the Dow is 18132.132.70. Any breakout above that, you gotta respect the potential for even higher prices. And the S&P 500 coming very close to breaking out here on the monthly, and the level to watch there on the S&P 500 is 2107.39. So any breakout in either the Nasdaq, S&P 500, or the Dow, any breakout above the monthly closing highs would suggest that you have to respect the possibility that the market is going to be probing much higher prices. And if we don't break out, then maybe now we are looking at a market that has failed to break out after some attempt in the month of November. Eric Muadid, Muadid.com. As always, I'll keep you guys posted. Good luck, peace, and blessing. ESCS.